I wanted to come and chat with you a little bit about Supermicro. This is going to be a really good fundamental lesson. We always talk about technical analysis on the charts every week on Sunday about what's going on in all the markets, across the markets. But this is a very specific stock, and we want to pay attention to what's happening here because Supermicro on Friday, as you can see, dropped 33%. So this 33% was a major move down. It might give us an opportunity to buy this company, but now we have to go do the homework. What caused the drop? The big news that came out on Friday was the fact that Supermicro CEO or co-founder, sorry, not CEO, co-founder was arrested for smuggling chips into China. So this guy went ahead and created a shell company and started selling the GPUs through China. He hid them in hair dryers, did all kind of shady stuff. So you have to ask yourself no, because one of the other side of the story was Supermicro itself, the company, was not charged. It was just this one guy. So you have to say, okay, is this one guy really the whole company, and is the company really doing well, right? And maybe this is just a bad story and it's now providing us an opportunity because the stock dropped on bad news, but there's really nothing wrong with the company. So now we have to go do a little homework, right? So that's what we want to do now. That's what I wanted to chat about, the fundamental side of this and how we go ahead and evaluate the company real quick. But this company here is not a good company. I'm not even going to bury the lead, right? This is not the first time somebody in the management has been in trouble. If we go back and look in history here, you see that Supermicro in 2018, the stock was suspended because of their accounting practices. These guys were already fudging the books. When you see a company doing this kind of thing, it's not honest. You cannot deal with unhonest people when you invest in your good money. So you have to be careful. So that's just one example. The next time these guys came around, boom, 2020 again, another accounting scandal. So at this point, I'm looking at this company. I cannot trust anything that they tell us. The numbers might look great on paper, but every time something looks so good, they come back and there's a scandal. So that's just two, right? Third problem. So now we go 2024, their compliance officer leaves, right? Ernst & Young was handling compliance for them and managing their accounting books after all the scandals they had previously. In 2024, Ernst & Young said, hey, we cannot continue this relationship because there's more funny business going on. So end of the day, not a good company, not a dip you need to go look buying, right? But at the same time, I want you guys to be careful because out here on the internet, if you're just looking at YouTube and some of these other channels, Instagram, whatever, these guys will make you believe that buying the dip is a strategy. Buying the dip is not a strategy. You need to know your companies. You need to go do your homework. Just a quick little search just like that, you could have found out very quickly that SMCI, Supermicro, is not a company you should be playing with. But yet, 9 days ago, we had guys on YouTube telling you this thing going to 45. You should buy it. Just buy the dip. Don't sell it, right? SMCI, 680% potential. When you see these things, it's just madness. You cannot believe it. Don't even click on it. Just keep on moving. This was just 2 weeks ago. That did not age well, right? 2 weeks ago, 9 days ago, these guys are still telling you to buy this thing just because the price dropped. Just because the price drops in a stock is not a reason to buy it. There might be a very good reason. And in this case, the leadership is not honest. They have been caught several times, and you have to stay away. I'm not giving you advice and telling you how to invest your money, but I'm telling you this is a big red flag for me. It's a big red flag should be for you when you're doing your investing. And it's just, trying to give you some education. A simple little query or prompt into ChatGPT, and you just say, is SMCI a good investment? Look here, ChatGPT would have told you this is not a good call right now. Why? Because unusually high governance and compliance and credibility risk. Right there, that's enough for you to say, okay, I need to go do some homework, okay? But I don't know what I need to do to, figure this out. You start with ChatGPT. It's free, right? So let's get started right there. And from there you can go look. But me, I love always looking at the chart, so we can take a swing over to the chart and see what's happening with the chart here. If I look at Supermicro, I actually zoomed out to the weekly so we can see some of the events. Back in 2018, we can go back here. The stock was kind of you know, kind of doing some things. 2020 it took off after COVID because the whole tech space kind of took off around COVID, right? But you see here, there was a big drop here. This one was 39% drop. This was the 2018 scandal, and then you see time after time the 2020 scandal here. This is another big drop, right? So you can see just with the news headlines from how this thing drops, right? 50%. Is this a stock you would really want to look at where it can take a 50% drop in a couple of days? I mean, or a couple of weeks rather. This is not what you want to deal with. This is a 5-week move. That's just all your money just gone. Like, this is not what you want to invest in, okay? So please, always don't just trust the chart 100%. Make sure you understand the company. Understand how they make money, what they make money. Is the leadership trustworthy, okay? These are the things we're going to be talking about as we release Wall Street Yardie, so pay attention to that. Visit the website, www.wallstreetyardie.com. Sign up for the app. We're launching soon. I just wanted to, throw this warning out here for you guys that buy the dip is not a strategy, okay? You need to know your companies and you need to see what's happening. This big move up here, this is when SMCI was added to S&P 500. So that's what happened there. But you can see it came right. This was not even a year. I mean, 2024, January 2024. And then look, the big drop started right back March. It didn't even last 3 months. And it came all the way back down. What is that one? This is a, oh boy, this is a 86, call it 86% move to the downside. You would have lost 86% of your money and it did not recover, okay? So you want to make sure you understand leadership. You want to make sure that it's not just the numbers, but that they're not getting in trouble for accounting issues and things like that. If you would have invested, $1,000 back in 2023, guess what you would have today? $1,000. You would have made zero money. If you bought up here at the top, you would be in the hole 86%. So I just wanted to share that with you guys real quick. Make sure you guys understand that it's not about just buying the dip. We want to make sure that we're paying attention to the companies and what they're doing and how they're conducting their business. And it's not just the big headlines, right? So we want to make sure we're paying attention to those things. Thank you for watching. Have a good one.